Good afternoon, I'm Rich Posson for Critical Point. It's February 17, and this is a free update on the gold market. Within our premium or subscriber service, we discuss gold and show some of the twists and turns during a year on gold, as well as some of the long term. But it's a secondary market. We're not too concerned if the accuracy isn't quite as well as for the stock market and economy and a few other commodities. We tend to view gold as more of an input to give us an idea of how the economy is going, stock market, and other commodities. At any rate, though, we've seen some significant price increase here in gold this month, okay, and this is a monthly nearby chart. And we're getting some inquiries of asking, hey, what do we think of gold? Is there a long-term upside potential in gold? And now, of course, gold this month is catching on to the news of Russia, Ukraine, and United States and Europe. We can see that gold has paid no attention to the inflation rate here over the past year. Now, that may be because gold rallied so well from 2018 into 2020 that it was rallying along with a growing economy. Not so much that inflation was moving higher, but just a growing economy. And maybe it did dial in the inflation already. It's also possible interest rates have concerned the gold traders that they might be high enough to counter inflation, to also counter the reason to buy gold. So there may be some fundamental shift here in changing things. We're nearly don't feel like we're on top here of the supply and demand as far as gold coming from the miners and the processors and then moving on into the hands of people or governments, central banks or whatever. But we do have an understanding of at least some of the gold supply demand over and on the futures markets, derivatives markets, and we can see the model can pick up on the various types of buyers and sellers. We have several groups that we're monitoring that it does point to a chance of maybe improving available demand over available supply. Okay, so here's what we've got. Gold rallied from 2018 into 2020 and then down into 2021 for what's called an LT3 business cycle. Okay, it was demand, then supply. All right. Now, that business cycle means long-term number 3. It's the third most important. It's the smallest, least important of long-term business cycles. We have a mid-size called LT2, which is a combination of 2 or 3 of these LT3s. We then have a LT1. That's basically the biggest bull and bear market within a decade. That's a bit of a simplification, maybe oversimplification. But that's how we look at it, all right? So the thing is, this LT3 can be found in cyclical research of markets, even economists working on economies or markets, fundamentalists, and certainly technical people just studying time price cycles, okay? At any rate, the LT3 can relate to what's called the kitchen business cycle. That runs about 3 to 4 years, bottom to bottom. So during that period, there can be an increase in the economy or business statistics, data, and then a decline. It was originally discovered by a Mr. Kitchen decades ago and discovered in business inventories as kind of a method of watching the economy throttle up, throttle down. So at any rate, we were concerned last year that this drive down to this might be a sign that it was all over for something far more important. Instead, it turned out to be a double bottom. It stayed above it, and now, of course, it's recovering. So the model today assumes this LT3 is moving higher into about July of this year on into, say, May of next year, and we may even be able to push it a little farther out than that. This gives us a gauge of how long it's going to take for long-term demand to buy enough gold or find a reason to stop buying or buy less. It also gives us an indication how long it may take gold miners to gear up and try to produce maybe too much gold, and it actually helps top out the price. And as gold as something that is tied to inflation, interest rates, economy, other commodities, and this and that, it could be a sign there could be other factors than just the gold miner and the consumer and the processor in between and the brokers. It can go well beyond that. And what it's also warning is we might now see a bias towards more bullish news, bullish fundamentals, economics, than bearish. But they'll still be both present along the way, and so there's still going to be twists and turns, but a bias towards more buying than selling, more time spent moving higher, and of course higher prices versus the amount of lower prices. Okay, now price-wise, we're coming up with objectives around 2042 to 2315, and they can be adjusted over time here as this develops. Okay, and it is a little bit more quantitative price and quantitative or technical. Some of the qualitative stuff that might be a little more towards technical. We need probably more supply and demand. So if you really want to dig into why this could work, you got to get out there and study those fundamental supply and demand. We don't have necessarily a wide range of data that can come in there to tell us what is truly going on in the gold industry. And then the psychological and money flow side of things of, do investors really want to own gold? So at any rate, it is looking fairly good here that this can work and move higher. Now, let's also discuss the larger business cycle, the larger stuff of the long term. There are super cycles that I'll try to remember to discuss towards the end of this video. But at any rate, this was an LT3 top and a bear market that may be over. We're not sure. Or at least it was over for this LT3. But the point is, it might be in a larger bear market. And the point is, the LT1 might have occurred at the same time. It's like many hands on a clock coming to midnight. Okay? If this is the case, gold prices are probably going low over the next 5 to 7 years. And I don't mean outright lower, seriously bearish, don't want to scare anybody by no means. It could be just sideways for those 5 to 7 years. It's just a sign it will be difficult to move to a record high. And there are super cycles that are up from the 1930s and probably 2000s for commodities, including gold, that may help support gold into next decade. And we may see record high prices of gold by then, but we don't have to see record high prices year after year throughout this decade. I don't think we will, okay? And the key is, if this major long-term top is here, it's really too soon to violate it. That would be highly unusual. So gold for this next LT3 should stop below the high. And it's interesting, the model is allowing a little bit below. It's keeping that as a possibility, okay? Another scenario, all right? And then it would just come down. And whenever it violates the low of 2021, probably a signal that gold's not going to do that well for a few to several years. Now, the point is, we can also, or a point we want to make, is this LT1 could actually delay to this LT3. This means maybe one last chance to put gold to another record high going into this major long term. Then we start the major bear market, and instead of maybe 5-7 years of bear, maybe we got to talk 3-5 years, maybe. We'll address that when we get there, okay? And it doesn't cancel out the super cycles, although I'm a little suspicious after looking at 500 years of history of some of these commodities. I wonder, can we put super cycle tops in this decade and maybe as soon as now, and they won't be higher next decade. But I've had a forecast for more than 10 years now. The super cycle high for commodities is in the 2030s, and for the moment we're staying with that, but we're looking over our shoulder for reasons that it might occur sooner. So for those of you who really believe gold's got to go much higher, we have the potential to do that. We can see it can take out the 2020 high. We can see we can get a new record high for gold. But at least for the next few years, we're not seeing gold over, say, 2,400. We're not seeing this 3,000 to 5,000, 10,000 talk we've heard for decades now. Maybe that occurs next decade. I don't think it's occurring this decade. And I don't think gold will do that well by mid-decade. I don't think real estate prices will do that well. I don't think commodity prices will do that well. The economy might throttle back. Stock market might have a little bit of a setback, but ultimately towards late decade, stock markets will be probably pounding out record highs. Economy will be record large, but the commodities, and specific as well as gold, don't have to be doing that well. They could have a supply issue or maybe even a demand issue. More supply, less demand. And by the end of this decade, yes, the stock market can be down. We can have a recession. Gold can be down unless they want it to protect themselves from just a disaster or something. But generally, gold would see a recession as deflationary, and so gold traders won't be instant buying it. So those are the scenarios we see way down the road. But right at the moment, it looks like the bulls are getting the upper hand. Now, we may learn this just blows over. This is just a little wake up here off the Russia-Ukraine deal. But it may be something to do that the market's forecasting more inflation out in the next couple of years. Even if the inflation rate comes down, if interest rates can't rise too fast and the rest of the world interest rates are rising fast, they may say we're still going to have inflation in a sense. Everything's going to get more expensive, just not as fast. Okay? And maybe we need some gold. There's many, many different scenarios that can occur in this bull run this year and perhaps into next year for the gold market. Now, ideas that could tell us we're wrong on thinking bullish, well, if it violates any of these monthly lows right in here, would be a worrisome that maybe we are in a bear market, but we won't know if we're in a major long-term bear market until it violates the low of March 2021. And this happens to be a futures continuous chart, so look at your gold cash chart if you're a cash gold trader or investor. At any rate, it is looking good, like the bulls are getting the upper hand here, and we're going to go ahead and make a call that this market might have some life into it going into later this year on into next year. It can be bullish, and it may yet trade to a record high, but we don't know for sure. As of today, we're just feeling a bit confident that it's probably in at least a minor long-term bull market for the next several months, maybe even into next year. And we'll just take it one step at a time and see what we get out of the gold market. Be sure to manage your risk in any markets, regardless if you're using your own analysis or opinion analysis of others or a trading system. Manage your risk and try to do due diligence, find all the information you can here. But at the moment, I must say it looks a bit promising for the gold bulls here for a while. Thank you.